Hello, hello everyone. Happy Thursday. Welcome to episode 18 of Wasted Wanderers. We have an awesome tech sandwich today. Yay! So let's not waste time and get started. So, what's our first story, Abhi?
All right, guys, let's pull this up. Kick us off, JD.
Right. So, SpaceX and Anthropic are finally headed to the stock market, but it might actually break the stock market. That's what this story is telling us. It's asking us, is the stock market actually ready for these mega IPOs? And we haven't seen this before, ever. These are like three different, almost $1 trillion IPOs. So let's double click on, will it break the stock market or not? So lots of reason why these companies are going public right now. The obvious one is early investors can finally get their cash out, their billions that they've invested. But I think the main reason is that these AI giants are burning mountains of cash just to stay operational. There was a deal recently between SpaceX and Anthropic, where Anthropic is paying SpaceX, I think, $1.5 billion a month to rent their data centers. So I can't even imagine what their burn rate is right now. Training and running massive models like ChatGPT require expensive run rate, right? They're spending billions on compute power, data centers, specialized chips. So it is time. Like, I think the private market does not have the money to support these big companies now. But I think people are wrong in assuming that they will actually suck out all the cash from the market. So there's something called the free float. Um, and the free float on these mega IPOs are tiny compared to regular stocks. So, what is a free float? When a mature company hits the market, it usually releases some portion of its shares. But for SpaceX, OpenAI, and Anthropic, insiders and early backers would want to hold their equity, and analysts expect these firms to float very little, like 10 or 15% of their total shares initially. So that means that even if the IPO is $1 trillion, the actual money that is being floated around is going to be like 50 to 100 billion, which I think the stock market can absorb. Now, my prediction here is that even though the stock market can absorb this, I think there's still going to be a bear market soon. So, right now, all the stocks are going up because of AI, but I think the music might stop with these three IPOs, because when people would want to put this much money in these stocks, it has to come from somewhere. So they need to sell their other positions in order to buy this. So there is going to be some second order effect on this. Um, Now, all these three, as far as I'm concerned, are going to trade on NASDAQ. And there is a very specific reason for that, because NASDAQ literally rewrote its market rules to funnel regular people's 401k retirement money directly into these tech giants. So, how is this happening? So, for example, for SpaceX, chose Nasdaq over New York Stock Exchange because of the new fast entry rule that slashes the waiting period for these massive IPOs to just 15 days for index inclusions. So that means after 15 days, these tech stocks will be part of your S&P 500, your QQQ, your other exchange traded funds. So this regulatory shift means that passive index funds and retirement funds are legally forced to automatically buy up these listings. So I guess that's where they're going to get a lot of this free float from. So yeah, I mean, my conclusion is that these IPOs are heading to the stock market, but it's because they're running out of cash, and everyday investors like you and me, we are going to foot the bill whether we want it or not. Your thoughts, Abhijit?
Yeah, so the Wilshire 5000 to GDP ratio, or market cap to GDP ratio, or more commonly known as the Buffett indicator, is sitting at, let me, yeah, 239%. Now, what Buffett has said is whenever this ratio goes above 120, there is a market correction. Of course, we haven't seen that, and just just for some clarity, we have been above 120 since about 2017. We have never really gone below that. So since about 2017, it's been above 120. Even the corrections that happened post 2020, post the pandemic, it basically brought it down to like 150, and it's still been going up. Now, one thing is that inflation has happened, meaning the dollar has constantly meant lesser and lesser, and so have over time all the other currencies. But since this is a ratio, the depreciation of the currency itself basically does not have too much of relevance. What this is showing us is that the concentration of wealth is getting more and more, or I guess more and more concentrated in the hands of a few. And they are actually calling the shots on the entire behavior of the market. Now, can Nasdaq swallow these three IPOs? Sure, it can. They're just going at ridiculous valuations. These valuations seem more ridiculous than anything we have seen before. But we got to remember, the last time we saw such valuations, we had not seen such crazy shit before that. So that's, to me, that's just flow of time. When we had the dot-com bubble, subprime mortgage crisis, you had seen companies going at valuations you had never heard of, even as recently as 2021 and whatnot. So can the market swallow them? Yeah, a lot of people will buy this stuff, especially people who scroll reels day in and day out, where they're getting a whole feed of how cool AI is. Invest right now, otherwise you'll miss the boat. The winners who will emerge after these three IPOs will actually just be the investors who sit on the sidelines and wait for the companies to get valued at reasonable prices before they go in. Personally, Anthropic and OpenAI, they're two sides of the same coin. I would basically value them the exact same. We are seeing models converge when it comes to performance metrics. OpenAI's most reliable customer is going to be the military. Anthropic has a strong base in the enterprise space. So they are both solid when it comes to giving a product that customers want to use and most importantly pay for. XAI is Elon's pet, um, and he's probably using Grok or the whole XAI platform in ways that are not disclosed to the public whatsoever. I mean, so is the case for OpenAI and Anthropic. So I don't think anyone is, obviously, proprietary stuff is not revealed for a reason. But the most valuable among these three is obviously SpaceX. Like, that's some tangible hard value that SpaceX is creating. And in fact, I don't think anyone else in the world is creating that. Reusable rockets, very pretty high payloads. Um, the whole. I don't know if SpaceX is still serious about putting people on Mars or anything, but I know they quietly sort of scaled back and said, okay, we are going to try colonize the moon first. But they are the only company with such a big, hairy, audacious goal, which is a hard asset company in the world right now. And the other company which has a big, hairy, audacious goal is also Elon's, which is Tesla. So, do I think it's a 1.75 trillion valuation? No, I've said this on this podcast before. I would be okay to value it at about 1 trillion, but not more than that. And the simple reason for that is it essentially right now, TLDR is SpaceX is, let's put it this way, SpaceX is not outpacing NASA when it comes to what it has achieved. It has a space vehicle. It can launch faster than NASA, and it is less bureaucratic than NASA. But again, NASA has gone to the moon. SpaceX has gone to the moon. I don't even think SpaceX rockets have carried people in them yet. So yes, NASA is bloatware, but NASA is also government funded. So if we had to really put them side by side, nothing on paper tells me SpaceX has exceeded NASA in any way. They have exceeded NASA in terms of efficiency, they've exceeded NASA in terms of reusable technology, but in terms of hardcore achievements, in terms of what is space exploration all about? Putting satellites in orbit, sending rovers, and then sending humans. SpaceX is basically the same as NASA at this point. Do we think NASA is? I don't even know what the valuation on NASA would be. Let me just ask Gemini. Why not? What's the latest valuation of NASA? Let's see what Gemini says.
I would say at least a
Uh,
trillion.
Annual budget cost, yeah, okay, because the value of, okay, it's not publicly traded. The context 24.4 billion, but that's based on their budget. Uh, I mean 24.4 billion, fine. Okay, we can always, even if we make that number 10 times, that's 250, and then we make that number 10 times more, then it becomes 2.5 trillion. So let's put both these companies at about a trillion of value. Now, SpaceX can outpace in the long run just because they are a privately run enterprise and they just have a lot more control on their efficiencies. But as of now, in terms of completely measurable outcomes as against the primary objective of a space exploration company, they're pretty much the same. So anything above a trillion, I think, is asking for too much, and I'm pretty sure none of the value guys are going to get into this. So definitely not for me. I anyways stay away from IPOs as much as I can. But yeah, I don't. There will be indigestion in the sense there will be some sort of a correction, but I don't think the correction will be restricted to these three. It'll just be across the market. Like the Wilshire is sitting at 239%. We are literally overdue for this by 2 to 3 years at this point. So that's my 2 cents. Yeah, it'll swallow it. People will buy this left, right, and center. Institutions will buy this left, right, and center just because they have to keep. Institutions basically, or institutional investors, they don't get graded on how well they do, because it is widely accepted in the financial industry that by using classical methods of all this forecasting numbers and all this bullshit, you can basically never beat the market. You'll get lucky once in a while and you'll get something called alpha, but by and large, asset managers are looking to follow the crowd. They are a crowd. So that if they do well, they can go and claim to their clients that I made some good decisions. But if they don't do well, they say, look, everyone else is doing badly, so that's why we are also doing badly. So they all tend to coalesce into a crowd, and that's why they needed the whole rules revamp on getting our 401k money into it. But again, institutional incentive to be on the buying side of all the hot stuff, and this is really hot, so they'll go for it. Let me just show you guys. We have a quick chart to discuss. Here is the free float of the total percentage of shares. So as JD was mentioning, only Microsoft is close to sort of 100% publicly owned. So what's free float? Free float is basically the number of, or the amount of total stock a company has that is available to be traded on the markets. So Apple's kind of close to that. This is as of May 29th, very recent. And then of course Meta, because Meta is the lowest. Mark Zuckerberg still owns a significant amount. Tesla, of course. In fact, even Google, 10% not publicly owned. Amazon, same ballpark. And then you have Nvidia, Broadcom. Or well, Nvidia is sort of in the middle, and then Broadcom, Apple about the same. Microsoft, basically, no one really owns too much of it. Now, I think SpaceX is going to start with a 4% float, and it'll go all the way up to 100. So the number of shares available to trade for, at least for SpaceX, will increase over the next couple of years. So guys, again, more of a reason to just sit out the IPO itself. You don't want to buy, unless you're just a hardcore fan. If you're just looking at an investment opportunity, I would say stay away. If you just want to be, I guess the everyday example would be, if you are the kind of person who wants to go watch a movie first day, first show, then go ahead, definitely buy the IPO stocks. They are more like your trophies rather than any money making assets. But yeah, that's what I have, guys. Let's go to the next one for today. So 5 things to know about colleges reinstating the SAT. Over the past few years, standardized testing became optional, and now this story is saying, okay, it's coming back a bit. And let's quickly go over. Okay, you can leave the charts for later, but my gut feeling on this is this will also lead to a concentration of where the best students want to end up going. Now, what I mean by this is, universities these days actually don't offer much anymore to they're significantly lagging behind in preparing the student population for what's coming. And AI has obviously rewritten this book. Now, universities are still stuck on the model where you'll take home some assignments and you try to do the best you can with it and then get a grade. And then there's, of course, midterms, finals, etc., etc. Now, assignments, basically AI will write it. Now, someone will come out with a counter AI saying, oh, my AI can detect AI. I mean, when we were growing up, there used to be something called turnitin.com, and it did a bloody shitty job at figuring out if you had plagiarized. Because too many times, if you really did your assignment well, you really put in time to it, you really were passionate about the assignment, it was able to find 90% plagiarism. Even after you have APA citations, footnotes, all the good stuff that you're supposed to do, it'll just keep finding stuff. And the issue with software like Turnitin or even these AI detectors is, we have to realize there's nothing original under the sun. And AI has basically made that more obvious than it was before. So what will happen is, in my opinion, the elite colleges, this article is calling out the elite universities, but the elite universities will be able to get away with this because students are not going there for the knowledge, they are going there for the brand value. The universities who will most likely not have the liberty to bring back standardized testing in a big way would be the unknown universities. Your local community college, I don't even know if community college requires standardized testing, but all I'm saying is your local state university, especially if you're not like a University of California, University of Texas or something, yeah, you are not going to be able to entice students if your requirements for SAT are going to go up, because at the end of the day, if the elite colleges themselves are suffering in trying to get students placed in jobs, then the lower ranked ones don't even have a chance. Uh, JD, what do you think?
Yeah, so this Wall Street Journal article highlights some massive crisis in higher education. University of California professors are practically begging leadership to reinstate mandatory SAT and ACT exams because incoming students are shockingly unprepared. I guess that's a code word of saying they're dumb. Um, but I remember when I had to give the SATs into get into the college that I went to. Me and Abhi actually went to the same US college. So this is kind of baffling. Like, why are college professors saying that incoming students can barely handle middle school math? Um, it's they warn that academic preparation gap has become so severe that students are instantly drowning in science, technology, and economics. This is like crazy to me, uh, because what people are saying is rampant AI use is accelerating the classroom crisis. So what Abhi mentioned, that instructors claim that sudden explosion of AI tools in high school has masked how much students are actually struggling. Without standardized tests to verify real academic capability, colleges are accidentally admitting students who rely on AI to pass, only for them to fail when testing actually happens. So obviously, as Abhi said, like there's finite permutation of assignment submissions that student can submit, right? Whatever is written has probably been scraped by AI anyways. So colleges have to change. My point of view is this is not the real reason why students are failing middle school math. They are failing middle school math because they are not being tested on middle school math at school. They've just been given assignments that can be easily copied into AI and AI can spit out answers. That's not real learning. So, another reason, the actual reason is that there was something called the test optional experiment that is actually backfiring. So, over 90% of US colleges dropped testing requirements during the pandemic to promote equity. Elite schools like MIT, Harvard, Yale, and Stanford have obviously like reversed the course already, but like University of California hasn't, and its faculty is now warning that standing their ground on the test blind policy is no longer compassionate. It's just setting unprepared students up for an expensive academic failure. And you have to remember, like, colleges are now more expensive than ever, and the return of investment by someone going to college is not the same as it was a decade ago or 2 decades ago. So, I mean, if I come to college and I'm not prepared and I can do everything with AI, then what's the point of college? So, in short, I would like to say that college professors are panicking because incoming freshmen don't even know how to handle middle school math. Yeah, so that's my 2 cents.
So, guys, let's look at a few quick charts from this one. So it looks like the SAT total test takers is actually increasing, and it looks like even though it was considered optional, most students end up taking them anyway to just try and get an edge. So yeah, it's kind of steadily risen. It's kind of plateaued between 24 and 25. So again, that's more like that's AI agents sort of taking over, and I guess more and more more, or maybe there's an absolute increase in the number of students saying no more college. Students met benchmarks for math and reading. So as JD was pointing out, 2021, so this is the last year before AI existed in a big way in our lives, was close to 45, and then we kind of finished 2025 with about 35%. So we have seen a 10% decrease in the number of students who can meet benchmarks for math and reading. Now, at some point we have to ask, okay, if students can't read, if your benchmark is reading itself, then sure, you can say that the that there is an actual decrease. If your benchmark is focus, what else can they focus on? Okay, fine, you can remove doom scrolling, but are these students able to listen to a educational 2-hour podcast? Are they able to focus on an audiobook for 2 hours? I'm not sure how replaceable would that be as a metric, because let's get real, when they go into the workspace, when they go into any company, they will have a laptop, they will have to produce Excel sheets, PowerPoints, and more increasingly AI produced content so that they can just get more efficient in their jobs. So trying to continuously curb the usage of AI, you can surely do that for things like exams, where it can be strictly proctored, no cell phones, all the good stuff. I still advocate that. But for assignments, it has to be more around, okay, we know you used AI. Where did you use it? How did you use it? What were your prompts? What were the outputs? And how well, or how much of the output did you use to produce a meaningful result? That should probably become more the benchmark for grading, but I would leave that to the education professionals. I just think that math still holds some value in modern day, especially up till your 12th grade math. Do you really need math more than that to be effective in a career in a post AI world? I'm not so sure. But again, reading itself, are we just saying reading is important because your textbooks have to be read? Why not an audio textbook? Why not test students on, okay, we will listen to this chapter or watch this 1 hour video on a professor teaching you some complicated concept, take notes on it, and we'll see how well you can do in the exams. Maybe that's another way to start trying to grade students' abilities. I think the last one, what's been happening is cumulative high school GPA has kind of been going up, but this is a little outdated, like 2021. I am not sure what this trend looks like from 2021 to 2025. I will not venture a guess just because I have no idea. There are two ways to probably look at this. More AI related assignments are leading to an overall increase in the cum GPA, but most of the time course grades are a combination of take home assignments and in class tests. So it might just be that it's plateaued out, because as JD was mentioning, cognitive ability has reduced, so being called out on the spot to do an exam, maybe grades are falling there. I would say there's a decent reason to say that. But then again, you have take home assignments where AI just does it for you. So maybe those grades are actually going up, because at the end of the day, the teacher has to grade in accordance with what the requirements of the assignment are. So, uh, and where we have the SAT mean score, man, like I remember taking an SAT which is out of like 2400 or something. I guess they have readjusted that. I know there used to be a 1600 version. Now there's like an 1100 version since 2021 at least. Interesting. I mean, see, these scores are obviously going down, and the biggest jump is between 22 and 23. And I guess that's when AI became such a big deal that everyone just started using these LLMs as their go to for every little question. And of course, then in that year, concentration on preparing for standardized tests went down. I'm not surprised at that sudden dip. But if we see 23 and 24, it's basically static and then slight increase in 2025. I think this might, again, this could just be statistically insignificant. But if it is statistically significant, then it is possible that there is some sort of an awareness rising in terms of all the slop that AI is pushing you into. And there's just more awareness on that. Even YouTube as a platform is taking cognizance of, slop content, and they're trying to sort of curb down on it. Um, I'm just, maybe it's the beginning, maybe it's some sort of a positive sign. But our next story is definitely not a positive sign in any direction. So, JD, kick us off.
Sure, yeah. So continuing to the bottom bread of a tech sandwich series, uh, I would say, yeah. So TLDR for this would be Meta just launched paid versions of Instagram and Facebook, and it's because of a $145 billion crisis. So yeah, let's double click on this. Meta is already making a lot of money on advertising, right? But they're trying to push away from relying entirely on it. So they are doing this by two things. So I think we have two stories here. So one, they're introducing series, episodic reels on Instagram and Facebook, and the other one is they're going to be launching the Plus subscription on Instagram, Facebook, and WhatsApp. So Mark Zuckerberg is trying to solve two massive problems right now. One is funding Meta's multi billion dollar AI infrastructure push. So that's where the $145 billion tag comes from. And second is stopping users from jumping over to TikTok and YouTube for longer content. So, yeah, let's dig deeper. Uh, so, for this $145 billion AI data center bill, free apps with ads no longer can pay for this computing power, right? Especially for this next gen AI stuff. So they are doing the tried and tested way, have a paid plus plan, something like a $399 ad features that they probably already have, but they don't show, like stealth viewing Instagram stories. I think they're also thinking of $20 Meta One AI tier, just like Google has. Uh, so yeah, they're trying to copy a lot of social media that have already done this. X does this with their, I think, blue check plan, whatever it's called. Um yeah, so Meta is doing this just to get more money out of their viewers. Okay, so second one is they're fighting a brutal war with TikTok over mini dramas. So the new series feature allows creators to stitch individual reels into an episodic bingeable collection. I think they're inspired by the Korean mini dramas. We can maybe talk about it, but Meta is copying this because the hyper addictive multi part mini drama generated over $1.3 billion last year on rival platforms. And Meta needs these organized hubs to keep users hooked on their apps instead of wandering off to TikTok. I think even Netflix is getting into this, although they're coming from the other side. So they used to have long form content, and now they're producing short form content. Uh, and then lastly, Meta is officially pivoting towards connected TVs to steal YouTube's ad dollars. So YouTube is the most popular app on TV, mobile, and web. So Meta wants a slice of that. They want to convert all these big user numbers that they already have into uh, uh, like monetizable dollars. So by pushing episodic series content and launching an updated connected TV app, Meta is positioning itself to capture this massive premium advertising budget that has traditionally gone to YouTube and streaming networks. So I think all in all, it's a good pivot, but it just shows that Meta has run out of things to do with their advertising, and now they have to pivot to these business models. And I doubt they can grow much more, but they can extract a lot of value out of their already watching viewers. So yeah, what do you think, Abhi?
So this trend is not new. It's just that now it's becoming more popular this side of the pond. Now, this trend has existed for last 2 3 years. These are called micro dramas. Some other words are short dramas or vertical dramas, where you basically have a bunch of reels or shorts or whatever you want to call. You just keep scrolling one after the other episode, and this became popular in China. It's called Duanju natively, and basically you have this overly exaggerated Asian acting in these dramas, which it's very similar to your Korean dramas or any other Indian movie, like just very exaggerated face expressions and completely sloppy, predictable storylines, which um, which don't even deserve a blink. But it has actually made some actors famous, especially in the countries where these have become popular. So that's obviously China, Korea. I'm not sure about Japan, but I wouldn't be surprised if those are getting popular there as well. Now, I have two conflicting views on this. Firstly, from a societal perspective, this is absolute degeneration, no doubt about it. But credit to Meta to actually thinking about integrating this into their ecosystem, because honestly they are the most well prepared for this among the Mag 7 companies, or among the companies that rely on advertising and and content platforms, because well, they own Instagram, and Instagram is like the birthplace. Well, maybe not the birthplace, maybe Snapchat is the birthplace, but I guess Instagram is the app that has made short form content ridiculously popular, right? To the point that LinkedIn is having to allow companies to put shorts. I don't know. I don't know if anyone's ever even bothered watching one. So no matter how much I dislike it from the well-being of society perspective, this will be bloody popular for them, and they're gonna rake and bank. I have no idea what this connected TVs is. I'll have to do some more research, but just having these series-based dramas, it's gonna take off for them. And I would say there is always a little bit of greenery even in the most brown looking things in that sense, but uh, there will be some actors, actresses, directors, producers, the entertainment industry, it will expand, and some people will actually become popular and genuinely uh, good artists can come out of this. But overall, the whole social media ecosystem, even for that matter, everything, all the other tech companies that are purely soft in nature, not the software in nature, the whole model relies on retention. These type of micro dramas are an amazing way to generate retention. So Meta, in my opinion, from a purely business perspective, is headed in the right direction. They still, Instagram has the largest market share in North America. I'm pretty like I don't have any doubts on that. It probably has one of the largest market shares in the world, just because India does not have a India does not have a firewall. So it's going to work out really well for them. I mean, TikTok hasn't done anything good for the world. I have no reason to believe that the series is going to be a net positive for the consuming society. It'll lead to some positivity for the producing society, especially some who really want to have a career in the creative space, and it'll probably work out good for some of them. But again, they'll be clogging and just it'll get much more difficult to get noticed. So overall, that 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 window of making this a positive experience from a producer's perspective is going to be very narrow, because as soon as this comes out, people will just jump on it, and before you know it, there'll be no space left. So yeah, the first few movers advantage is going to be a real thing from the producer's perspective with this feature. For the society, I can just say be very selective. Start putting in guardrails on how much you use these apps, because it's the whole instant gratification model will lead to more and more mental burnout as more and more such features come around, which are purely designed to inject you with some adrenaline. Yeah. All right, guys, that brings us to the end of our topics for the day. Let us know what you thought of this episode. We are slowly but surely moving up in the subscriber count. A little more boost would definitely help us. So do like, share, and subscribe, and yeah, spread the good news. We are going to be here every Thursday, bringing you the best of the stories that we can find. We'll try to keep it diverse, and we'll also try to keep our opinions, cover a large spectrum of all the information that's floating around about these topics. Let us know what you like, let us know what you don't like, and yeah, the weekend's right around the corner, everyone.
All right. Take it easy, guys. See you next time.
See you next time. Bye.